Hello, it's Brian Rezny. It's question and answer day. And what I really want to cover is about do-it-yourself investors, people who are self-managing their money. I've been managing money for over 33 years. I will tell you, over half the clients that hire my firm on a monthly basis manage their own money, and they did a horrific job. Most individuals that manage their own money are not really managing any money. They have no strategy in writing. They do almost no research at all on what they're buying. They buy what they've heard of or know with no research, no strategy, which includes when to buy and a risk management strategy when to sell. This is very sad. If you look at Delbar studies from the last 3 decades, the investor who does it themselves often makes horrifically poor returns, even worse than working with a conflicted Wall Street firm or bank or annuity person. Even worse than that. Folks, if you're a do-it-yourself investor, if you're not spending 20, 30 hours a week minimum doing research, hardcore research, not looking at the value of your stock or your bonds or your mutual funds, but actually doing research on the economy of each one of those investments, on corporate earnings reports, all the things that go into real research, if you don't have a real strategy in writing, you're going to do poor. A lot of people don't want to admit it, but the bottom line is this. Studies have shown do-it-yourself investors, the vast majority of you, and I'm going to say 99%, do no research at all on the positions you buy. You don't do any research after you buy. You have no written strategy either for the overall strategy for growth, how you're going to research, and risk management when to sell. So what happens? You buy investments that you heard of and you make lousy returns. I'll give you a great example. This Sunday I received a call on my radio show, and a gentleman probably in his 60s or 70s. He bought Exxon about 4 years ago. He says, "What do you think about Exxon?" I asked him, "What research did you do?" He said, "I didn't really do any research. I bought it because it was 50% down." Yeah, it was 50% down 5 years ago from the 5 years before, and now you're down another 30%. I said, oil prices are down. ExxonMobil is not a great investment. What is the catalyst or thesis that you put together in order for why you feel that this should have been bought in the first place? He didn't have any, because he hasn't done any research when he bought it, and he hasn't done any ongoing research for it. He's basically pipe dreams, hoping what he bought is going to go up. Folks, you cannot manage your money this way. If you're unable to do real research and run a strategy, find a fee-only fiduciary firm like Rezny Wealth Management to properly manage your money. You're just going to cost yourself a fortune in more volatility, more losses, lackluster returns. For what reason? Find a real firm who does the real work. You're going to have to pay them to do the job, but I'll guarantee you this. Real money management is much more beneficial to you, the investor, than shooting from the hip, gut reactions, no strategy, and buying things that you've heard of just because you've heard of them. That is a recipe for disaster in your portfolio. Give us a call if you've got a $500,000 portfolio and greater, and you're looking for real advice, real money management 100% of the time. Have yourself a safe and profitable day.